let's take a look at the commodity space now, where we have seen gold prices gain up this week at around 1.5%, and gold has been actually going good because of that safe haven buying. The dollar also has seen a bit of a weakness, and that in turn has been supporting gold prices. But 1660 continues to be a resistance. There's not too much happening in case of silver, but we have seen a bit of a turnaround happen for the energy space. Remember, the US inventories for gasoline and crude declined in the previous week, and that in turn has supported the crude prices. So NYMEX gained 1.5% yesterday, and the Brent crude oil prices are also back above 120. This is the weekly chart, though not too much has happened this week in case of the NYMEX crude prices. The Brent, of course, has seen a bit of a gain, so we have seen 120 back on that one in the day today. So 0.5% of gains coming in across for both of those crude prices. Let's get in then. Chirag Kabani, he's technical analyst at AskChirag.com, and he joins us in Mumbai studios. Chirag, hi, welcome to the show. Let's start with gold first, and there have been these GFMS report and a Credit Suisse report as well, which says that 1550 will come first, and then you might see a rebound from those levels.
See, at this point of time, we are seeing a fairly large range-bound trading, 1620 on the downside and 1680 on the upside. Unless and until we don't have a clear break on any side, let's continue to trade the range. 1620 on the downside is acting as a good support, 1663, 1670 stiff resistance. Today we have the unemployment data coming up in the evening. If that is way below expectations, we could see again a sharp rally coming up on the gold. So going short wouldn't be a strategy at this point of time. One has to wait for a clear break of 1620 on the downside.
But Chirag, how do you look at the gold prices in the sense of these reports? Because GFMS says that you might see 1550 in next 3 months, and then you might see $2,000 announced before 2012 ends. So are you looking at this $500, $600 of a range coming in for the rest of this year?
So it is quite possible gold could move down till 1580, 1550. We are seeing a sustained trading below the 200-day moving average for gold. But on the long run, still it is a safe haven buy and a good to add on dips. If 1580 is broken on the downside, 1550 or 1480 cannot be ruled out.
Chirag, there also is a Goldman Sachs report on the base metal prices, and they say that $9,000 per ton is what they are looking for the third quarter. Though, of course, in the near term, they are not very bullish onto the base metal prices. But with the Chinese GDP numbers also expected during the day, what are your feelings on that?
See, on the base metal specs, we have just seen a breakdown on the copper prices, but actually it is just the first day of breakdown. If copper is again able to move up on LME above 8,500 levels, then we could again see a sharp rally coming up on the copper prices. Nickel has been trading strong. After the sharp bounce back from the 880 lows, it has been consolidating in the range of 920 on the downside and 950 on the upside. I'm expecting further up move on the nickel prices also. Expected target are till 980.
Another metal which has been doing quite well has been aluminum. That really has outperformed copper in last 2 or 3 sessions. Do you see the run-up continuing in that one as well?
Yes, aluminum is looking quite bullish onto the charts. Any dips to 106, 105.50 would be a good buy. One could place a stop loss below 105. Closing basis for upside target still 108. If 108 is taken on a weekly closing basis, again 110, 111 cannot be ruled out.
While much of the factors have been moving against the crude prices, we saw the US supplies at 22-year highs, the production is at a 12-year high. The data from in the recent sessions hasn't been so good, but the weekly numbers have really played well for the crude prices yesterday. Do you think that is something to keep the crude prices up for?
See, let's take it in another way. Crude prices have been consolidating in the range of $101 on the downside, $107 on the upside. This is just a brief consolidation of the sharp move from $75 to $110. I'm expecting further rise in the crude prices. One could look to buy it around on any dips to $102 on the downside with a stop below $99 for an again upside target of 107, 110 in short to medium term.
How would you look at the crude prices, the NYMEX crude prices from here on? Because people have been talking about 100, breach of that, 98 also seen as a possibility. Do you think it's possible in the very near term?
See, $99 is the monthly trend line. Long-term support comes there. Unless and until that is not taken out on a closing basis downside, let's take a weekly close below $99. Going short on crude wouldn't be a best advice. One should look to dips with any, coming up downside till 101, 102 would be a good buy with stops below $99 for an upside targets only.
Let's talk about the agri space then, and you have a call on Jeera, which has declined quite sharply in this month, last couple of months actually, as the production is expected 36% higher this year as compared to previous year. But how is it looking on charts now? Oversold?
See, if you look at the complete chart structure of Jeera, Jeera has been falling from 17,000 levels and it has touched a low of 11,600 on the April futures. At this point of time, it is quite oversold. I'm expecting a short corrective rally again onto the upside. One could look to buy the May futures around at 11,900, 950 zone with a closing basis stop loss of 11,700. The first target would be 12,650. If that's taken out, 13,800 cannot be ruled out on Jeera.
Just one final word on the agro space yet again, Chirag, and the other very, very volatile commodities have been mentha, cardamom, potato on MCX, and we have seen lots of moves happening in other spices and also soybean in the recent days. Anything that you're picking up from that one which you think would venture out more money?
Let's take mentha first. Mentha has a good support at 2,350 levels. Unless and until that is not breached on the downside, I'm expecting it to consolidate in the range of 2350, 2550 on the upside, and again a fresh up move can be seen onto it for 2800 levels. Soybean is a good buy on dips. We are seeing support coming onto the prices at 3200 levels. Any dips, till the time prices are holding above the key level of 3130 onto the May futures, I'm expecting further rally till 3300 or 3400 in short to medium term.
And how about the spices space? While you have a buy on Jeera, are you looking at turmeric and pepper as well? Because a couple of these commodities also have been very choppy in the recent days.
Pepper is looking weak actually onto the charts. I'm expecting pepper to fall down. Till the time pepper prices are trading below the key resistance level of 41,000, weakness could continue onto the same. Pepper could fall down till 36,000 levels in short to medium term.
All right, Chirag, we'll let you go at that. Thank you so much for joining us. Those are the calls coming in from Chirag Kabani. He's looking to buy Jeera, but he's also buying into base metals and crude for the very near term as well.